Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Thursday, September 18, 2014, daily chart of SPY. If you remember over the past few videos, I've been telling you that this is either a rounded top and we continue down, or it's bullish consolidation and we continue up. And that's why there's been basically kind of a no-trade philosophy over the last week or so, because we have to wait for this thing to play out. Well, it's playing out. It's obviously gone up, okay? And there's probably some more upside, but not much. And we're in a turn window like I've been telling you. And what happens is on the 22nd, next week, is the fall equinox, okay? That usually will signal a turning point in the market. Now, since we've been going up, and one of the main reasons, or actually two main reasons we've been going higher, is number one, the options expiration week, and number two, the Alibaba IPO. So I've been telling you for weeks that this thing was coming and that they're going to jam the market higher, not let this thing fail. No way, no how is this thing going to be postponed. It's the largest IPO in history. The company's valued at, I think, $171 and change billion, okay, as of tonight, on a pricing of $68 a share. Now, $68 a share is interesting because don't forget it's a Chinese company, okay, and it was going to be in the 60s or maybe even up to 70, in the low 70s per share. Now they picked 68 for a reason, I believe, because 8 is a favored or lucky number in the Chinese culture. So I think 68 was picked for a reason. I think it's a good sign. I think it will be a successful IPO. I think they learned their lesson with Facebook, which was at the time, you know, an enormous, well-hyped IPO, and essentially it was handled poorly. Who's to blame doesn't matter, whether it was a combination of the investment banks and the exchange, the NASDAQ market, whatever it was, it doesn't make any difference. The point is that this one's not going to fail. In my opinion, okay, and this is just an educated guess, this stock's going higher tomorrow, okay? How much? I don't know. Maybe it gets up into the mid-70s, but that shouldn't surprise anybody. It's not going to finish below 68. If it does, there's real trouble, but I don't believe it will. And one of the main reasons is the investment banks who run the show. Okay, you've got Goldman Sachs, Citigroup, Credit Suisse, Deutsche Bank, Morgan Stanley, and I think maybe one more. These guys have, I believe, what's called a 15% holdback, which is called a green shoe. And that gives them an allocation of 15% of the stock. And I don't know if that's the case here. I'm just saying that's usually the case. They have some allocation of shares that when the flippers, they're called, dump the shares on the IPO and they want to flip them for a quick $2, $3, $5, $10 profit, whatever it is, somebody's got to be there to buy it. These investment banks are going to be there to buy the shares down at 68 if it gets down there, and that's the reason. So this thing's probably not going below 68. If it does, there's trouble, and that's the story. Spend enough time on the Alibaba IPO. Let's move forward. So what do we expect from here? Basically, as the market inches higher, on the S&P, okay, you're at a little over 2011 right now. You can probably, in my mind, the best case scenario for now is you can get up to 2030. I don't know that we get there, but you can get up to 2030 as high as. And I would expect a pullback. And I expect a pullback following the fall equinox next week. Traditionally, it's the day following the day of the fall equinox. So this would be Tuesday that a decline would start. And this is, again, you know, probabilities, educated guess, logic, past experience, all that stuff. I'm just going on the experience of when these things normally occur and what occurs. Now, the market turns on the equinox, for example. If we were going down into the equinox, you could expect a turn higher. But since we're going up into the equinox, I expect a turn lower. So it's not that the market goes down after a fall equinox. It's just a turning point. Just like full moons tend to be turning points, The spring equinox was a turning point. It's whether you're going up or down. It doesn't really matter which way we're going. I just want to know that it's a turning point and then act accordingly. But it's not just the stock market. So that brings us to, before I discuss the other markets, let's go over just real quick to the IWM. I wanted to discuss that tonight because this is a weak index still. Okay, your S&P is at a new high, your Dow is at a new high, and I know I talk about this a lot, but it's well worth mentioning. Where is the IWM? It's not even in the same neighborhood as an all-time high. In fact, we haven't even come close to the secondary high from this month. Okay, this was the high back here from this year in July. Okay, now we had a lower high. I mean, unless we take out this high right here, this market's going down. There's just no two ways about it. And the first stop is going to be about 110. So, you can use, if you're just jumping on board now and you want to take a short in the IWM, if you're so inclined, a very, very conservative play would be, unless we gap over this tomorrow, you take a short here and you either have a stop order in this neighborhood at just over 116 or at this high here at about 116.60, let's say 116.70, and you can let it go down and just trail the stop from there. So that's one idea, because this is a weak index, so you always pick on the weak player, right? Okay, so now let's go to the other markets, back to the fall equinox, back to turning points. Now let's look at a couple of things. Let's look at the euro. This is the inverse of the dollar. On this platform, I can't bring up my dollar chart for some reason, so we'll look at the euro, which is directly inverse to the dollar. Okay, and I want to look at a longer-term chart, because here's another market that looks like it's going to turn. Now, why do I say that? Well, because you put in what looked like a tail here, a bottoming tail here, okay, but you came down and you breached this low, so you began to test it, and this week you breached that low, but then you reverse back up so far, okay, and that's a sign of strength in this market. It's a sign that the dollar looks the opposite, and it looks like that this market is oversold, okay. And it's certainly in a downtrend, but in downtrends, you're going to get bounces along the way, right? So there's nothing that says that we can't come up to 132, 132 and a half on the euro in, relatively short period of time, a week or two, if we're going to bounce and relieve some of that oversold condition. So I would look for a bounce here in the euro on the turn of the equinox, okay? Let's look at another market, all right? We always talk about this one, so now let's talk about gold. Now, I said that gold could certainly collapse or gold could go higher, and we're at an inflection point, and here we are. Well, let's call the fall equinox an inflection point. Now, I'm going to provide my members with basically a two-legged trade in gold, so I'm not going to give it to you here. It's not fair to them, but I will tell you that I am probably a day away from issuing a trade alert on a two-legged trade in gold that should be a blockbuster. Okay, I don't know why. I see it clearly. The math works. My time factors work. The chart pattern is setting up for it. It's just everything looks like it's setting up for this two-prong approach, and I think it's going to be a fantastic trade. And so my members are going to get this trade probably tomorrow on Friday. And, once we're in it and it's starting to play out, I'll talk about it. But for now, I'm going to leave it be, because it's not fair to the members, and they would get upset with me if I gave this trade out on the free video. Not fair. Okay. Next up, oil market. Let's take a look at the USO. And right, this is back to the weekly chart. All right. Well, that's okay. We'll start with the weekly. The USO still may have a little more bounce in it. It may have a little more on the upside to relieve some of this oversold condition, right? This looks very similar to gold, but it's going to be limited either way you look at it. So there's more downside to be had. So I'm going to leave it there. I've been talking about oil, been saying the same thing over and over again, and I'm going to leave it at there. The members are in a trade right now in the USO, and so like gold, I'm going to leave it alone, leave it there. If you want to guess the trade and use your imagination, feel free. They are in a trade as of yesterday, and we'll leave it at that. Next up, let's talk about interest rates because, again, with the fall equinox, this is the 10-year interest rate. Now, this is interesting too, right? So your bond market has been going down and your interest rates have been going up since this low here. Now, you're coming into the 200-period moving average and you're coming into the fall equinox. And now there's a third leg to this stool. What's happening is, normally, okay, under normal circumstances right now, all right, you would see a decline in the market coupled with a decline in interest rates, right? It's that old adage, if they're selling the market, they're running into the treasury market where to hide the money, so the interest rates get driven lower. Now, so if the stars line up and this plays out the way I think, okay, beginning next week, you should see a pullback in interest rates, a pullback in the market. Gold market should start to move higher, and the dollar should start to move lower, and the euro should start to move higher. All those things should start to happen around next Monday, Tuesday, Wednesday type of thing. If they don't begin to happen, something else is unraveling, and we'll address it then. But that's where I am currently. And with that, folks, I'm going to leave it there. Hopefully it was helpful. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.